HIMS and HERS is on fire, up 21% this week, 68% year to date, and a massive 330% over the past year. But is there still room to run, or is this rally about to collapse? With skyrocketing growth and strong demand, HIMS has caught Wall Street's attention. In this video, I'll break down why the stock is surging, the risk ahead, and whether now is the time to buy or take profits. Let's dive in. Welcome friends to the channel. Today let's go straight into HIMS and HERS. What is HIMS and HERS? HIMS and HERS is the leading health and wellness platform on a mission to help the world feel great. One of the key things with HIMS and HERS is you do not need to physically go and see a doctor. They acknowledge that no two people are the same, and the company provides access to personalized care designed for results. HIMS is a telehealth company, and they have two branches. They've got for HIMS and they've got for HERS. So for HIMS, they specialize in doing medications such as the ones over here, and for HERS they do medications over here. So the idea with HIMS and HERS is you do not need to physically go out and see a doctor. Everything that you do is online and is very patient-centered. And just to show you what I mean by patient-centered, look how easy it is to use. So if I want to find something for losing weight, then it's this simple. You fill out a questionnaire online, and let's just say my goal is to lose 16 to 50 pounds, and the website finds a custom plan for us. It's very easy to read, very easy to understand, and it asks more questions about the patient themselves. So you just fill out details, where you are and your date of birth, your medical history. It's very simple, very step by step, and at the end they make a plan, and then it's reviewed by a doctor, a clinician, and then they either approve the treatment, reject the treatment, or they suggest an alternative. So it's very easy to use. There's different branches of customer service available. So you've got clinicians that manage things like side effects or clinical queries. You've got the normal customer service team that manage things like, if you've not received the parcel in the post or anything like that. As part of the electronic medical record, this step over here, HIMS has designed this themselves. They've used something called MedMatch, which is a new product that they released in November, and they make use of AI and machine learning against the expansive dataset at the core of HIMS and HERS platform. In simple terms, what they're doing is they're using AI to try and provide the best treatment selection for the patient based on their demographics. So for example, if they are a 40-year-old female with an Afro-Caribbean background, then AI will match them with someone that's got the similar background, same age, same background, and they'll see what treatments worked for that person, and based on that they will suggest something for this patient. They're doing this by leveraging millions of anonymized data points all through AI, and the end result, they provide a treatment which is most suited for a patient's unique needs. Other things with HIMS is they try to acknowledge some of the issues when accessing healthcare. 3 of them are listed just over here, so low income areas. A lot of their customers are from people with a lower economic background, and the things that they specialize in is weight management and mental health. Other things with individuals over 65, sometimes mobility can be an issue with these patients. Financial constraints and things like weight loss not being part of their medical coverage, these are all barriers to treatment. And now today they have over 100,000 subscribers that are aged over 65. They also have special discount for in the military, teachers, nurses, etc. So these are some of the things that HIMS are doing, where they are trying to acknowledge where the issues lie and they try to provide a solution. Everything looks promising so far. Now let's start looking at some of the financials of HIMS, and I'm going to be starting with some of their key performance indicators. So here is the number of subscribers HIMS has. Every single quarter there's been an increase. In the last earnings, you could see every single quarter the number of subscribers that HIMS has been steadily increasing, and just in the last quarter alone they've increased their subscriber number by 175% compared to the year below, which is absolutely insane. And the more important thing over here is you've got the non-personalized customers, and then you've got the personalized subscribers as well. The personalized subscribers are the ones that are going to be retained for longer because the products that HIMS are providing for them are personalized to that patient, whereas the other products is not so specialized. It can be generic things as well. So this graph over here looks really promising and really impressive. Here is just a milestone that HIMS has achieved, 1 million personalized subscribers, and there's also reviews on HIMS which are all looking really promising. Let's go straight into the numbers now. The first thing to note is when looking at HIMS, it's got a market cap of just over $9 billion. So this is on the lower side of things. It's also got a PE ratio of 93, which is generally considered as very high. But in small growth companies like this, it's not abnormal to have PE ratios such as this. And it's also useful to see where it's been before, which we'll explore later in this video. They have a very minimal debt, $11 million of debt on a $9.3 billion company, which is absolutely minute. Scrolling down, the revenue has been increasing year on year, and the margins have been increasing year on year as well. Only in Q1 2024 where this company started becoming profitable, and since then they've been increasing their margins steadily as well. When looking at their earnings, they've hit all of their targets, even their quarterly targets they've been hitting. And when looking at their earnings per share, other than 2021, they've hit all of their targets, and in recent times they've hit their targets as well. And in the last quarter they've done better than what was expected by 187%, which is crazy. They're steadily increasing their free cash flow, which is really nice to see, and they've got more assets than liabilities to cover. Further looking into the numbers, they've got a price to sales ratio of 7.48, they've got a current ratio of greater than 1, a quick ratio greater than 1, which is really good, a low debt to equity, which is really good. They've increased their sales every single year over the last 5 years by about 60%. In the last year alone, they've increased their sales by 56%, and the last quarter alone, they've increased their sales by 77%, which is absolutely crazy numbers here. This is further visualized over here. So every single year, the sales have been increasing. The earnings per share, although negative, it has started coming positive in the recent quarters, and it is a straight trend in this direction. One of the downsides, which I will explore later in this video, is the shares outstanding with this company. This company is diluting their shares, which is not ideal as a shareholder. Let's look at some of the metrics and where it's been in the past as well. Every single year for the last 5 years since it went public, is being green except for 2021 and 2022. 2021, this stock took a really big beating. It was down 55%. It currently has a PE ratio of 96. Previously, it's been negative, so it's really hard to compare because they've only recently become profitable. However, when looking at the price to sales ratio, it's much higher than where it has been over the last 3 years. The 3-year average is 3.5. Right now, the price to sales ratio is 8. Same goes with the price to book ratio, where it's currently increased 160% compared to its 5-year average, and the same goes with the price to free cash flow ratio as well, where it's much higher than where it's been over the last 3 years. Looking at HIMS stock, it's much higher, it's much more expensive than where it has been recently. The only thing in terms of valuation where it's actually better than where it's been before is the free cash flow yield. Further data on HIMS, this is the free cash flow yield per share. You could see this has been steadily rising over the last few quarters, and the trend is up currently, which is very good to see. And if we also look at the EBITDA margin, it was negative. However, recently it started becoming positive as well. So you could probably draw a line going from negative to positive, and it's a straight trend like that. Their net profit margin is also in an increase as well. So from negative it's become positive, and there's a clear trend now as well. Going forwards, let's see where HIMS lies. So last few years, the growth on HIMS revenue has been crazy. 83%, 97%, 67%. 2024 is going to be about 68%. And this year, we're looking at a 40% growth in revenue, and the year after 15%, and the year after that 19%. So HIMS is a solid growth company, and they've got a track record of achieving their growth in the last few years. And there's 15 analysts this year saying that they'll hit their targets, 12 analysts saying next year they'll hit their targets. So likelihood is these ballpark figures are generally a good representation of where HIMS will be in the next couple of years. 2027 is quite far from right now, so I'm not going to pay too much attention to this number over here. However, these two numbers, they're interesting. Let's look at the chart of HIMS. HIMS is currently in an uptrend. You could see this by HIMS being over the moving averages over here. Over the last few weeks alone, HIMS is up 77%, which is absolutely crazy. It's hard to do technical analysis on this sort of company because there's not much of a price history. It only goes back to 2019. Support and resistance lines is not too helpful. However, I wouldn't pay too much attention to that because there's not much of a history with this company. What I would be looking at though is some of these moving averages, because as you can see during its uptrend, as it's been going up, it has always met this moving average. As it's going up, it's met this moving average. It's met the moving average over here. It's met the moving average over here. So this moving average is interesting to keep an eye out on. Let's now go through some of the risk associated with HIMS. The first thing is it's a small market cap company. We've seen the market cap of HIMS is $9.3 billion. Generally speaking, I don't like investing in companies that has a market cap less than $10 billion. I've only got one stock in my portfolio that has a market cap smaller than this. And the reason behind that is because these stocks can be really volatile. Yes, they can go up 2-3 times. However, they can also go down 50, 60, 70%. You got to be very careful with these sort of companies. We know HIMS, they've gone past the introduction side of things, and now they're at this growth stage of their journey. So they are still a small company, but they are rapidly growing. We've seen this by their sales increase every single year, every single quarter. So currently, HIMS might be around here in the growth phase. As HIMS does go along this graph, they will get bigger in market cap. They will mature more as a company. However, currently, they are around here. The second risk is it's already up sizably. Over the last year, it's up 300%. Year to date, from January this year, it's up 68%, and over the last week alone, it's 21%. So investing in something when it's already up so much is a very big risk. You gotta assess the risk-reward ratio sometimes. The third thing is the high PE ratio. There's lots of growth predicted ahead. The question is, can they deliver? So their PE ratio is 93. It's really high when looking at it on paper, and based on its historic average, it's still much higher. But in small growth companies like this just goes to show that investors have high hopes for this company. The fourth risk with HIMS is the insider selling that's going on. Every single month there's been insider selling going on since 2024. So 15 million worth of shares sold here, 8 million and so on. And recently, at the end of January, there's been inside sales of almost $20 million, and most of the sales have been by the CEO, the CFO, and the CLO as well. If insiders are selling their stock this much, should we be buying more of this stock? Or if we already own this stock, should we be thinking about selling stock as well? Should we follow where the money is going? That's just something to consider, but I see it as one of the risks. The next thing is the share dilution. I mentioned since 2019 till 2023, the shares have been diluted heavy. This is not good for the shareholder because the value of their share essentially goes down because HIMS are selling their stock on the open market and we're paying the price for it. But saying that, this is very normal practice in growth companies. In companies that are new and growing, they need that capital in order to grow. Otherwise, the only other option for them, if they weren't doing this, is to take on loans. And you could see already that HIMS has a really low debt. So the route that they are taking is diluting their shares, getting money that way rather than taking loans, which I guess in the long run is a good thing. And if we look at recent quarters, they have still been diluting their shares. However, it's much less dramatic than what it has been in the past. Eventually, when HIMS gets to the maturity stage, I suspect that the dilution will stop, or they'll start even buying shares back, and that will benefit the shareholder greatly. The next risk I see with HIMS is the capital expenditure. Let me show you what I mean. This is a graph showing the capital expenditure by HIMS. What is capital expenditure? This is the amount of money that they are spending on things such as marketing or advertising or just trying to grow the company. And over the last few quarters, their capital expenditure has been increasing dramatically. However, the last couple of quarters, it has gone down. So this is just something to keep an eye out on. Recently, they had their ad on Super Bowl, and of course, this cost them a lot of money. You know, spending this money in advertising, marketing, it will only increase the exposure to HIMS, and people will become more aware of HIMS, and it will grow HIMS in the long run. So we'll wait and see to see how this goes. And the final risk I wanted to talk about is a stock-based compensation. Let me show you what I mean by this as well. Stock-based compensation is a way for companies to reward its employees with shares of the company's stock instead of cash. This is a bad thing for investors because this is an indirect way of diluting the shares. So it's just something to keep an eye out on. We could see that the amount of stock-based compensation that HIMS are doing is increasing, and this is not nice to see. But at the same time, when overlaying the amount of revenue HIMS makes, the stock-based compensation, although it's increasing, it's not increasing at the rate that the revenue is increasing. So the actual percentage of stock-based compensation to the actual revenue is actually decreasing, which is a good thing. These are the risks that I've identified with investing in HIMS today. And finally, I just wanted to show one thing. Morningstar have an article on HIMS, and they have their fair value of HIMS at $17.50, and currently HIMS is trading at $42. So sometimes the analysts, they give a target which is really far from where the stock is currently trading at. So in situations like this, you gotta decide what to do. Now going forwards, what is my plan with this stock? So currently I don't own any shares of HIMS, and I regret that because I did know about this in the past. However, I just didn't have the time to research it properly and make that buy. I think investing right now is really risky. They have their earnings next week, and stocks like this where it's such a small market cap, it can go in either direction. It can go 10% up, 20% up, it can go 10% down, 20% down, and it's really hard to predict these things. It depends on how their earnings and their guidance goes. I personally think they'll do really well on their earnings. They're doing a lot of the right things, so I don't see why they won't hit their targets. At the same time, HIMS is at its all-time highs. You just don't know how high it will go. You don't know how low it will go. I'm definitely planning to own some of this stock. I want a position in HIMS, and I do think in the long run, it has the potential to be a really good winner. But jumping in right now is not the best idea. For me, what I'm going to do is I'm going to wait until it hits this moving average, and every time it dips from that, then I'll be adding to my position. Buying at this price though is not something I'm planning to do. Just for your own visual, if HIMS was to hit this moving average in the next few weeks or so, we're talking a price just under $30, and that's a 32% move away from here. I mentioned risk reward as well. We could see every time it has been going up, it has hit the moving average at some point. point. If you believe that this will continue going up without hitting the moving average, it's a very optimistic view. Your risk over here, let's just say, is a 20% downside. However, if HIMS was to continue going up, maybe, I don't know, but if HIMS was to potentially continue going up from current price, we're talking a 20% gain. So this is just my opinion. Nothing of this is financial advice. I'm just telling you what my plan is. This is a stock that I want to own. However, at current valuation, I just can't justify it. If you found this video useful, please like, subscribe, and stay tuned for more.